Okay. Well, welcome everybody. I am not Jim Christina. I am Dennis Russell, Deputy Executive Director and Chief Business Officer. Welcome to today's presentation. The presentation is being recorded. We're fortunate to have Cheryl Finkelstein and Chris Andrzejczyk with us today from the CPA firm CPA and advisor firm of Dembo Jones. APMA has utilized the services of Dembo Jones for about 20 years. APMA and its component organizations have been informing and guiding members through the Paycheck Protection Program loan process from round 1 and now to round 2. An exciting development with round 2 is that 501c6 organizations such as APMA and its components are included as long as a litany of eligibility requirements are met. The American Society of Association Executives, ASAE, did a tremendous job lobbying Congress to include associations, explaining how important associations are to the overall economy. APMA signed on to all letters submitted by ASAE to Congress. Before I turn it over to Cheryl and Chris, I was going to say, please mute yourself, and it looks like everybody has. That's great. If you have a question, please indicate so in the chat box, and Chris and I will be monitoring that chat. We don't have a lot of people right here, so you might even be able to wave your hand, and we'll catch you. So anyway, thank you, and take it away, Cheryl.
Thank you. Thank you for your time. If you have any questions, or can everybody see the slides? They're coming through clearly.
Yep.
So the first thing I wanted to talk about was, how do I find a lender? And the SBA website, if your bank is not being responsive, has a wealth of information. They actually have a program called Lender Match. And if you request copies of the slideshow, these links are live. And so it'll give you lenders that are near you. You put in your zip code and your address, and it will give you a list of lenders that are near you so you can do applications. I think that's a great feature that they've added. They had it earlier as well, and people just have to remember to take advantage of this. And it doesn't matter which lender you use. You could use a large bank, or you could use something as small as PayPal or Quicken if they're making loans still. So you could really choose whichever lender you're comfortable working with.
APMA is very fortunate because our current day-to-day operating bank is a lender. So it's pretty seamless for us.
That's great. A lot of banks, I've had some clients text me back, email me that their banks aren't doing smaller loans. So that's why I like having the Lender Match, so they can look for other options. They're looking to get the bigger payouts, which isn't nice when you have a long banking relationship. So the general eligibility, and I'm sure you hear about on the news, is that the organization does not employ more than 300 people. That you'll use, if you had a first PPP loan, which in this case I know we can't because we're a 501c6 organization, it's been used. The gross receipts are less than 25% in the same quarter. But there is a workaround if you do all your dues billing in one quarter and then the dues come in later. A lot of organizations just bill their dues in the first or second quarter and they receive the bulk of their funds at that point. So they do have number 5, which wasn't highly publicized, but it's out there, that you can compare annual gross receipts from 2020 to 2019, as long as you are in business for all of 2019. So that's one of the ones that gets missed. And I think for a C6 and even C4 organizations, that's something important to consider, is that annual gross receipts test versus the 25% gross receipts test. And then of course it meets a necessity requirement. This has been in the news a lot. There's been a lot of discussion within the organizations themselves, CPA firms. What does it really mean? I'm signing something that says my organization really needs this money to operate, to continue operations, or we're projecting that we'll need that money to continue operations in the future because we're having a large drop off.
Now, Cheryl, a quick question.
Sure.
APMA and many of its components waived first quarter dues, which was really like June, July, August, because our members were having such cash flow issues because they weren't able to see the patients and do the procedures that they become accustomed to on a daily basis. There were restrictions in hospitals and such. Other consultants have told me that us waiving the dues still qualifies because we were going to lose those
The revenue,
members.
correct.
Okay.
Because they're going to look at financial statements, and we'll go into the data that you need to substantiate the loan, and there won't be the income there for that quarter.
Okay.
So don't think we have to worry about us being a sports league. You can't receive more than 15% of your receipts from lobbying activities. And that's key. And if you're putting in the notice on your dues statements about the percentage of lobbying, we want to watch that. Just so we know, and then we may want to look at when we go through the definition of lobbying in the future, how to adjust it if lobbying has been overstated. Lobbying can't be more than 15% of the organization's total activities. And total cost of lobbying did not exceed $1 million during the recent year. So the application process opened January 13th and is continuing through March 31st. And literally, if you get this, you can click on this link, and I don't know if it will show. It will take you right to where the SBA website and the application, so you can go through the application. Just to help you gather your information. Some banks are doing this in paper. A lot of them are doing this online. So you just fill it out electronically. The necessity test is really, do we need this loan to continue ongoing operations? There is an affidavit that you sign saying, yes, I need this loan. This is really being looked at more for loans that are more than $2 million. It's a huge issue because of what happened in the first draw rounds of PPP loans, where a lot of the larger entities, publicly traded entities, were applying for them, and they really didn't need them. They had large retained earnings where they were going to be able to continue operations without those funds. And I'm sure you heard about some organizations giving the funds back, especially when it got out into the public that, why did you take that loan? You're a major corporation, you didn't really need that money. This isn't free money. This is money that the government wants us to use to help continue operating. So the basic rule, which hurts a lot of nonprofits, is if you don't have payroll, you can't have a loan. And I know a lot of nonprofits also use management companies, and they're not using the same definition as management company being treated as an employee. So if you don't have employees, we can't take out the loan. So gross receipts, basically it's just what it sounds like. We'll go through it. It's any funds that the organization is really receiving except a prior grant. So it's the amounts that you've received as contributions, grants, gifts, and other deductions, dues assessments from your members or affiliated organizations, gross receipts from business activities, the amount that you receive from the sale of assets, and the amount that you received as investment income. What's very important when you're looking at these, and I'll go to the next slide, is that it's all done without the expenses. So essentially we're taking the total revenue that would be on the Form 990. This is a copy of the 990 EZ. And we're adding back all of the expense deductions to come up with our gross receipts. That's the number that they're looking at. So when you're pulling financial reports and things like that, make sure that you adjust it if you've had any cost of goods sold or sales expenses or fundraising expenses. Those need to be added back. Those aren't allowable in calculating gross receipts.
So Cheryl, we had an interesting situation, excuse me, where we had to cancel our big scientific meeting last summer. And we happened to have event cancellation coverage with communicable disease coverage. So we did get an insurance settlement with that. Now others have, I just want to get your sense of this. It really was more of a reimbursement of expenses, so that wouldn't factor, that settlement wouldn't factor into the receipts calculation, correct?
I don't think that would factor into it. That's insurance coverage.
Okay, thank you.
But it's just one of those things when you're looking at it, the gross, these items, a lot of people pick up total revenue as gross receipts. And that's not the number that we're going to be looking at for this purpose. So the calculating the maximum loan amount, hopefully everybody wants to go for the maximum. We're starting with 2019 payroll costs. They haven't updated it to take 2020 because we're doing a comparison. So we're going to look at 2019 gross wages and tips that were paid to people who live in the US. I don't know if any of your component organizations have foreign employees or employees who live abroad. Those wages would not count for this calculation. We're going to look at taxable Medicare wages and tips for each quarter. And then we're going to add in any pre-tax employee contributions for health insurance or other benefits. Anything that's excluded from taxable Medicare wages or tips. We're going to take, if somebody earned more than 100,000, that amount needs to be adjusted. And then we're going to look at employer benefits, group health, vision, life insurance, disability, dental. All of those items will go into our calculation for the maximum loan amount of what is payroll. So along with our retirement contributions, anything that's going into it, and they're giving us a lot more leeway. They've added allowable expenses here. But this is an unemployment tax, state quarterly wage reporting forms. So if you're paying unemployment tax, if you're not self-insured, that's an expense that goes in as well. You'll just take the average of it, you'll total them up, divide by 12, and then multiply that by 2.5%, 2.5, and that would be your maximum loan amount. I had a client contact me yesterday or the day before where they had applied for an $800,000 PPP loan. And they got a call from their bank saying, well, you know what, we calculated it and we came up with $1 million+ PPP loan. So now my client has to decide whether they want that extra $200,000+. Was nice. So the banks are double checking your calculations. In this case, it was a favorable outcome for my client where they were allowing more than they had originally requested. So some of the documentation that they're going to be looking for to come up with this calculation, and this needs to be submitted as you're doing your application, are the 941 and quarterly wage reports, your quarterly unemployment reports, anything that's going to support the amounts that when you're looking at your 990, we put into pension plan accruals, anything, benefits and items like that that normally fall into this section of the 990 on your statement of functional expenses, that can be submitted as support. They may at time ask for invoices as well. So they're really looking to make sure they have the correct number for your payroll costs. So this was one of the things I said could be other documentation. If it's easier to pull invoices for that, that works as well. But they've said you can submit the statement of functional expenses as long as it's been completed correctly. I hope it's been completed correctly. So once you are approved for your loan and you received your funds, what I recommend is generally keeping those funds in a separate account, segregated from your other money, and then using it to pay out the expenses so you can truly track what you use those funds for. You'll know, okay, did I hit my number? Am I hitting 60% of payroll? Are there 60% of this is going to payroll? Or am I using not enough on payroll? That way you can track it, you'll see what's coming out of that. Or you could just do a transfer to your operating account for payroll but that way you'll be able to really see how the funds were spent. It's just, that's something I recommend. I think it makes it easier to track how you spend your funds. So 60% have to be used for payroll, and we discussed what goes into payroll. And then the other 40%, and they've increased this for this, they've increased the type of expenses we're allowed to deduct and use on it this year. Payments on any interest on a mortgage obligation, rent, utilities, interest on other debt applications if you have notes that were out before this, if you're financing a piece of equipment, covered operation expenses, covered property damage expenses, covered supplier costs, and covered worker protection expenditures. And we'll go into what each one of those means. So payroll costs include salary and wages, if you've paid somebody for a vacation, severance pay, which unfortunately may have happened, group health insurance, retirement benefits, state and local taxes that were assessed, not the withholding, but any state and local taxes that are assessed on the employee, group life, disability, vision, and dental. So all of those will go into payroll. What does not go into payroll is FICA. So the employer portion of Social Security and Medicare taxes do not go into the payroll cost calculation. So that does not go towards your 60% of payroll costs. That's just something to keep in mind when you're looking at your calculations. You need to back out this FICA. So covered worker protection, that was something that they came up with. That's a new term for this. It's an operating or capital expenditure that basically helps a business adapt. What do I need to do so my employees can work? So I'm sure we've all seen them in grocery stores, or when if we're going to a store, the sneeze guards, the physical barriers between people, off-site or on-site health screening capability. That could be all, if you've bought thermometers, the reading scan thermometers, things like that, that you can have in your office to do temperature checks as employees come in, the alcohol swabs to clean them off. Or I do love how they call face masks, particulate filtering face pieces, or other kinds of PPE. So face masks, if you're buying face masks and face shields for your employees to provide a safe working environment, those expenses are allowable. Covered operation expenses. Well, we're all working differently now. So what have I had to do so my employees can work successfully if they're working from home? Did I need to have a new Google Drive subscription? Did I switch from having QuickBooks on my computer to a QuickBooks Online subscription? Did I increase my cloud storage because now everything is being done remotely? And of course, the infamous Skype and Zoom licenses, because the world right now revolves around Zoom. So those are all expenses that would be allowable under covered operation expenses. And remember, these can be up to 40% of, you can use 40% of the proceeds on this type of expense.
So Cheryl, Cheryl, like APMA, we had dramatic changes because of this. We outfitted everybody with new laptops, converted to Office 365. Just making it so everybody could work from home based on the restrictions coming in the office. My question is, if we have the loan period for 24 weeks or so, are we only allowed to apply the cost during that 24-week period?
Yes, it's for that current 24-week period.
Okay, so if we incurred the consulting costs for the Office 365 and we're leasing the computers, the leasing of the computers is easy because it's monthly, you can figure that out. But the upfront costs for the Office 365 consultants, how would we handle that? Those
would unfortunately are not going to be put into this period. It has to be expenses incurred during this 24-week period that were from the date of funding 24 weeks forward.
Okay, thank you.
Any other questions while I'm at a stopping point? I don't know if I'm talking too quickly. I don't even know how long I've gone. Oh, we got plenty of time.
Hey, Cheryl, it's Chris real quick. Can can you just highlight a little bit on the importance of that 60% without getting into too much detail of, I think, forgiveness?
Sure. So if we don't hit the 60% payroll, then the loan will generally need to be repaid. So we're really going to want to make sure that we're looking at the payroll expenses. I think most people are going to end up using the funds 100% on payroll. That's just the way it's going to work out. It's going to be safer for them. But if you don't spend 60% of it on payroll, then when you apply for forgiveness, it's not going to happen. You'll end up having to repay the loan. And while repayment terms are favorable, we'd rather get the money and use it the way it's intended and not have to repay it. So just focus on your calculations and make sure when you're doing them that you do add everything in, because it should be quite easy to get to the 60% of payroll because we're basing it off a payroll number. And now that they spread it out for 24 weeks, the initial period was 8 weeks. And that was causing problems for some people because they weren't going through it in 8 weeks because of their timing, the way their paychecks were hitting the bank or when the funds were being withdrawn from the bank. So one of the other areas I wanted to talk about is lobbying because of that 15% limitation. I really want people to think about what is lobbying and how they've been reporting it on their 990s, just to see if there's anything that they may need to adjust. So really, lobbying is an attempt to influence legislation through communication with Congress, a state legislator, or any federal government employee or state government employee who works on rights legislation. If you're trying to influence them to change it, you're probably lobbying. And what goes lobbying support activities is all of the preparation, all of my research, everything that I need to do to state my position in a favorable light, to try to get the government employees to buy on. Why should we do this? If I was a podiatry organization and I wanted to say lobby for over-the-counter orthotics being deductible through my 125 plan, through a 125 cafeteria plan, through using my health reimbursement card, and I started lobbying employees for it, that would be a lobbying expense. If I wrote legislation saying this is truly a medical device, and they are, but the over-the-counter kind, not the kind that I get at the doctor's office. If I wanted to lobby something along those lines, if I was pushing out that legislation, that would be a lobbying expense. Grassroots lobbying is when we're trying to manipulate the general public to get them on our side of this situation. Because sometimes it's like, oh, you're really focused on the government, but we know a lot can happen if we get the public involved. If we get the public behind us, then we have a better chance of getting legislation to go through. It's all about selling it and marketing it. And you want to be careful about direct communications with federal executive branch officials. I don't think a lot of people lobby in them, but most of it goes through Congress. Sorry, my cat a cat snuck in here and went on my screen. There we go. Sorry about that. Zoe decided to visit. Let me let her out. I apologize. Sorry. So lobbying, we mentioned that. And then just trying to lobby the federal executive branch for your position. So something that isn't lobbying, that people may consider lobbying, is when they actually reach out to you and ask for your opinion on legislation. So when you're writing replying to that, that's not lobbying. If they've asked for you for your technical assistance or your understanding, that's not lobbying, and those written requests back should not be considered in your lobbying calculation. So if they've come to you said, this is what we're planning. What do you think of this opinion? That's not lobbying. They're asking you to do it. You're not going to them. Membership. So if APMA is going out to their local members and stating their position on a proposed piece of legislation, that's not lobbying if it's directed only to the members. If it's talking about a legislation that's really of direct interest to the members of APMA, and it doesn't encourage the members to go out and do any grassroots lobbying. They're not asking the members to go out and really talk about it and get a groundswell of support for that legislation. So that would not be considered lobbying. So this is an example. So No Parole, whose purpose is to keep violent criminals behind bars, is a 501c6 organization. They send a special newsletter to their members addressing pending legislation that would make it easier to parole convicted felons. The newsletter provides an in-depth analysis of the legislation and includes statistics on paroled felons who are repeat offenders. Up to that point, we're fine. We haven't engaged in lobbying. But now it says the newsletter urges No Parole's members to contact their congressman and express their opposition to the bill. At this point, we've just changed our newsletter from not lobbying to a lobbying expense. It's a fine line, but when you're urging your members to take action, to contact their congressman and express opposition, that's going to bring up your lobbying percentage. So if you have, we just want to go back and look and see if we haven't filed those returns, what's my lobbying percentage? Also, if we're talking about a broad social and economic issue, something that's applicable to everybody, that's not grassroots lobbying, that's not lobbying. As long as you're not talking about a specific legislative proposal or you're encouraging members to take action, it's when you're doing those items that you're really moving into lobbying. Does that make sense? I hope so. So here's an example. We have Our Planet, whose members are environmental scientists, and they make a presentation on the impact of global warming on Earth's climate to a congressional committee that's responsible for environmental affairs. The OP does not encourage the committee members to take any specific action, although it's a bill restricting carbon dioxide emissions, although there's a bill restricting carbon dioxide emissions pending in the House. Our Planet's presentation does not address the merits of the bill, so therefore they haven't engaged in either direct or grassroots lobbying. So it's a fine line, but you really want to look at that. What are you doing in relation to lobbying and seeing if it's really lobbying or if it's more informational in nature?
Cheryl, can I ask a few questions on this lobbying topic? The first one, back to the newsletter option. Is it the whole then, so let's say one page of newsletter says, I urge you to contact Congress. Does that mean the entire newsletter expenses are then included in that cost? Or is it like, can you prorate it?
I would allocate it
to one page, yeah.
the same way I do if I'm looking at unrelated business income.
Okay.
And income tax for advertising.
Okay.
Because the whole purpose isn't that, but that section of it is. If the entire newsletter was about that particular piece of legislation and urging your members to take action, then it would all be lobbying. But otherwise, I would bifurcate it.
And then on the federal executive agency, is it federal or state executive agency, or is it just federal executive agency?
I believe it's federal and state.
And then does it have to be okay? So in some situations, we're talking to agencies that aren't one of those designated individuals. Does that mean it wouldn't count then? They could just be staff of a federal or state agency.
If you're attempting to influence the legislation, then we're getting close to it, but it's really these people. And if they're an official or employee who may formulate the legislation. So if that staff may be formulating the legislation, helping write it, then that's lobbying.
what about administrative action? For example, a board of podiatry, right? You want to get interpretation from a board of podiatry if a podiatrist can treat a certain procedure. And so would that count as far as their executive agency? So you're not asking for legislation, you're just asking for interpretation. You're not
That's
asking.
not lobbying.
Yeah, say that again.
That's not lobbying.
Oh, okay, thank you. Okay, that's helpful. Thank you. That were my questions.
Oh,
Thank you.
it's okay. I just wanted to, it's a weird topic and there's so many nuances, but that's why I put the slides in and I pulled out a bunch of technical jargon as well. So now we're going to move to loan forgiveness. So the second draw loan funds, it's really, we're looking at everything that we needed to apply for the loan. We're basically going to need to update it to a request forgiveness. So its employee compensation levels are maintained. They don't want to see a drop in compensation. That loan proceeds are spent on the payroll costs and the other 40% of eligible expenses. Obviously, you could do 70-30, it could be 100% payroll costs, but we have to have that 60% on payroll. So that's the key. This has sunk many boats where they haven't hit the 60%. So you can apply for forgiveness at any time once up to the maturity date of the loan. So you don't have to apply for it when you finish spending the funds. You have some extra time to apply, just in case it doesn't fit in your time frame to apply right away. It's not something that said, oh, I used up my 24 weeks of funding, now I need to apply. You have extra time to apply. You can do it anytime up to the maturity date, but if you don't apply for forgiveness within 10 months of the last day of the covered period, then you have to start making loan payments. So basically you get 24 weeks and then an additional 10 months to make sure you get it in. But the banks will start emailing you right away requesting that you apply for forgiveness because they want to be reimbursed by the SBA. So you will start getting emails right away requesting that you put in your application so they can get their funds back. It's not something people thought about because I was getting clients earlier saying, should we apply? And I was telling my clients to hold off because we were waiting for proposed legislation to pass. And they were getting pressured from the bank saying, no, 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 you need to do this, when the law clearly stated they had additional time. So this is the basic documentation required, and you'll see it's very similar to what we needed when we were initially applying. So it's for payroll. We'll need to show them the amount of documentation paid. We'll need documentation for the amount of cash compensation paid, the various tax forms that we mentioned earlier, payment receipts, canceled checks or account statements for the employer contributions or health insurance, retirement plans, things like those, along those lines. Non-payroll for expenses that were incurred during the covered period. So that's the key. It has to be during this 24-week period. So copies of mortgage interest statements, rent and lease payments. That's a great way to get close, use up the 40% if you're not going to use it all on payroll. Utility payments, these things always increase. What SBA did, which is nice, is they've come up with a special form for small businesses. So if you receive a loan that's under $150,000, there's a much easier form to fill out. It's a form 3508S. It's fewer calculations, less documentation. The rules on the website say borrowers are required to maintain but not submit the payroll calculations and the non-payroll expenses. Just because that's what the website says does not necessarily mean that's what the bank will accept. A lot of banks are still asking for additional documentation to make sure that the loans meet the forgiveness. They don't want to be on the other end of it and have to come back. So they still may ask for the documentation, but generally if it's under 150,000, you need to maintain it, but not submit it. And really, I just wanted to show you on the 941, when you're looking at it. So if you have 941s, I pulled a 2021, it's the same on the 19. We're looking at this line here, this total taxable Medicare wages and tips, and then we'll add back the other items. And then on my last slide, just some important links. So this will take you to the SBA website. This is guidance on the loans, resources. There are a lot of frequently asked questions. There are about 18 pages of them out there. And then again, another link to the loan application. Does anybody have questions? Anything I can help answer? I don't know if I spoke too quickly.
So Cheryl, the calculation of how much of the max loan you can get is
Mhm.
based on 2.5 months of payroll, average payroll.
Yes,
So if you have 24 weeks, a 24-week period to spend the loan amount, you really shouldn't have an issue being able to justify spending those monies.
no, they've made it much easier. 8 weeks was people were finding it too hard. 24 weeks, everybody's like, no brainer. They're just using it almost all for payroll.
Okay.
One of the key things is you want to maintain your employee levels. Once you take out the loan, you don't want to drop employees or reduce salaries because they will look at that in the calculation for forgiveness.
Sounds good.
Anything else? I'm here for you.
Well, anybody who's on the call today or views the recording, would they be able to reach out to you and Chris?
Yes, they could just click the link and it'll send on the application and the PowerPoint, and it will show them my email.
All right, and we will proactively get this PowerPoint out to the state execs.
Thank you. Anything?
I think we're good. Thank you so much for providing this really helpful information.
Oh, it's my pleasure. Thank you for having me.
All right. Thank you, Lucy. All right. Everybody take care. Have a great day.
Thank you.
Great, thanks, everyone.
Bye-bye.